Hello and welcome to this London South Eastern focusIR investor webinar. My name is Sarah Lowther and I'll be chairing the next 2 hours when we'll be hearing from 4 companies, which are PYX Resources, Helix Exploration, Fulcrum Metals and Metals One. Now, each company will present for up to 20 minutes each, and then there will be 10 minutes Q&A when we'll take questions from you, our audience. Okay, to our first company now, and it's PYX Resources. It's a mineral sands mining company. It's a producer of premium zircon. Its key deposits, Mandiri and Tisma, are large-scale near-surface open-pit deposits in central Kalimantan in Indonesia. Now, over the past few months, it's announced a milestone shipment of ilmenite, its first shipment of monazite-rich zircon concentrate, and it has connected its Mandiri mineral separation plant to the local electric grid. It's dual listed in London and Australia, and the news flow has been plentiful. I'm delighted to be joined by the Chairman and Chief Executive, Oliver Hasler. Oliver, over to you.
Thank you very much, Sarah. Hello, everybody. As a matter of fact, I am in Palangkaraya, Central Kalimantan, at this moment in time. As Sarah mentioned, and I'll assume, like in all the presentations, that you have read the disclaimer. As Sarah mentioned in her introduction, PYX Resources is a mineral sands mining company. We're listed since 2020 on the National Stock Exchange of Australia, and since November 2021 on the main market of the London Stock Exchange. We have 2 deposits. One is Mandiri, which is in production since 2015. A second one, which we acquired in February 2021 in the same region, which is not in production yet. We mine today for premium zircon, which is our premier product. And as byproducts, we have rutile, ilmenite, and monazite, which contains rare earth. We have a very large resources. We're the 3rd largest producing mineral sands company based on zircon resources. Not only do we have a very large resource, we have also a very high quality resource. On one side, we have a very high assemblage value because of the highest concentration of the minerals we have is zircon, which is the most expensive one of the minerals, which gives us a high natural margin. On the other side, mineral sands, and in particular zircon out of Kalimantan, is very well known for their high whiteness, the low radioactivity, so the low uranium and thorium content, and the low iron and alumina content. So on the top, you will see our Mandiri tenement. It is an alluvial mining, so at the end we're mining sand. What you see in the upper picture is our mineral separation plant. So we have an activity on our mine in central Kalimantan. It's an easy access. It's only 1.5 hours flight away from Jakarta. And Palangkaraya, where we have our main offices, was a candidate city of becoming the new capital city of Indonesia. And as a result of that, we have an international airport, we have hospitals, we have hotels, we have a government paved road all the way to the mine and to our tenement. And as mentioned at the beginning, we even have access to an electrical grid for our production site. Today, we have a mineral separation plant with an installed capacity of 24,000 tons per annum of zircon. So we have the capacity we need for our 5-year plan. We are exporting today. We're fully licensed in both of the tenements. In Mandiri, we're licensed to export all the mineral sands we explode, so we can export premium zircon. So all of it is processed material with higher than 65.5 grade zircon. We do not export concentrate. Our ilmenite has a higher concentration than 45 grade, and soon we will start with the export of rutile with a grade of higher than 90%. We have customers all over the world. We have access to a deep sea port, which is Banjarmasin in the south part of Kalimantan, from where we export all over the world. We acquired, as I mentioned before, Tisma in 2021. It's also a very large tenement with 4 million tons of zircon resources, which is licensed for the next 10 years. So this will be our potential new project to accelerate our total investment. Mineral sands, as the word says, it's at the end, it's an alluvial deposit, so a secondary deposit of minerals. It's mining sand opposed to mining in hard rock, which is a relatively easier and lower capex mining investment. At the end, it's mostly a gravitational process, so we separate their mineral sands from clays and wood and other things you will find in the ground. But it is a separation through spirals, jigs, and shaking tables in order to separate our minerals. There's no chemical involved, so it's at the end of the day, it's an environmentally friendly process. So our main products would be on one side premium zircon, on the other side titanium dioxide. Titanium dioxide, which comes from three sources: ilmenite, leucoxene, and rutile. Since the beginning, so since 2020, we have used the proceeds of our original listing to increase our capacity, and with that to increase our production. We should not forget that 2 of those years were COVID years with very difficult access to the mines. So we're very happy with our results. Year after year, we have been growing our zircon production, our zircon sales, also our revenues. Also as a result of a very strong increase of zircon prices. From 2020 to today, prices have gone from $1,400 per ton to $2,000 per ton. So it's a category of products that has had a very strong increase of price, mainly because of the increase of demand and the lack of supply. We have achieved for the second year an underlying EBITDA, which is positive, very unusual in the mining industry to achieve that in only the third year of production. And as I mentioned before, considering that 2 of those years were COVID, we have about $8 million of cash on our balance sheet with no debt. Last year, we closed with increase of production, zircon production of 31%, zircon sales of 24%, and total sales increase of 20%. And we expect an improvement this year. We will be showing our first half results mid-September. So as I mentioned before, you can see on the map we're in central Kalimantan. Kalimantan is the Indonesian part of the island of Borneo, very well known for the mining industry. The Chinese started to mine for alluvial diamonds and gold 2,000 years ago, followed by the Dutch. Today in central Kalimantan, the main mining is coal mining and mineral sands as well as gold. In the middle of the slide, you will see what makes our deposit so special. On one side is the very high tonnage, 14.9 million tons of heavy minerals, from which 10.5 are zircon. In particular, if you look at most of the mineral sands mining companies in the world, they're ilmenite miners with byproducts of zircon and rutile. We are zircon miners with byproducts of ilmenite and rutile. This is important because zircon is the most expensive of these minerals. We are low capex. Most of the projects have to invest a very heavy investments in roads and ports. We already have access to roads and to ports that today are used to export coal, iron ore, and palm oil. So the investment is already done. So the only focus has been investing in the capacity of our production. On the slide of the left, you will see the comparison of our concentration of zircon and titanium dioxide compared to the rest of the industry. You will see that Mandiri has a concentration of 4.8% of zircon and Tisma 3.3%, compared to most of the mines in the world with 0.5%. The result of that is a high assemblage value, which at the end, the only thing it means is every time we take 1 ton of ore out of the ground, we have a higher margin. This is a natural given margin. Zircon is a very interesting material. It's used in heavy industry. 50% of the zircon is used in ceramics. All of you see it at home. What covers your tiles, dinnerware, and bathroom furniture, what makes it white, hard, scratch resistant, and chemical resistant, that is zircon. For the same reason, it's used for airspace programs to cover the shuttles or to used for teeth. It's also used for foundry industry, chemicals, refractory, the bricks that are in the glass and the iron or in the steel melting industry are made out of zircon. It's also used now for high-tech applications. The biggest growth of zircon, growing at levels of about 25% of the applications, are high-tech applications. So zircon is used today for semiconductors, batteries for electric vehicles, solar cells, etc. And a result of that, zircon is in most developing countries considered one of the critical elements and minerals required towards the transition towards carbon zero. This chart is extremely important for future valuation. You will see I'm very bullish about zircon prices going forward. The industry and analysts have predicted that there would be a lack of supply for the actual demand. This was delayed by 1 year because of COVID, but in January 2021, prices started to grow, as I mentioned, from $1,400 to $2,000 per ton, where they are today. If you look at all the zircon projects going out, they're not enough to cover the future demand. The largest zircon miners in the world, Iluka in Western Australia, is reaching the end of their mine life. Over the next 2 years, they will convert into a rare earth mining company. The second largest one is South Africa, which is Richards Bay from Rio Tinto, is also reaching the end of their mine life. And if you look at all the new projects out there, and you assume that they will occur at the time they have announced and the volumes they have been announced for, it's still not enough to cover for the actual demand. So we believe this lack of supply, or the imbalance between supply and demand, will grow with a CAGR of 2.5 to 3%, which has a huge impact on price. Also very interesting in our industry is the 5 main players cover 72% of the supply. So it's a very disciplined area. So there's not enough supply and very few players in the market, which brings a lot of price discipline. Zircon is a commodity. So as every commodity, prices go up and down. But if you look what has happened over the last 20 years, and even if you cut through the commodity super cycle, prices have steadily been going up. And we expect that to continue like that in the future, especially when the world comes out of the economic crisis they're going now. And we predict an important increase of the demand. The same titanium dioxide, which is, so the source for titanium dioxide is ilmenite, rutile, leucoxene. They're all used for the same. You use ilmenite and leucoxene to generate synthetic rutile, and all the rutile is used to produce 90% of its pigmentation. The rest is used for welding rods, and then to produce titanium, mainly for the construction of airplanes. Exactly the same players. All the players that produce zircon are the players that produce ilmenite and rutile. They come together within mineral sands. And the same thing like in zircon, titanium dioxide is considered another critical mineral required towards the transition to carbon zero, with very interesting, innovative applications. So we have a very clear focus, and we can still increase the valuation of our company. We still have huge areas of extension for drilling. We have started this, as we predicted this year, we started with the sales of our byproducts, ilmenite. Shortly, we will start selling rutiles. With this increase of production, because we have been absorbing all the cost within zircon, so the ilmenite and rutile sales will be at 100% margin. which will increase our profitability. So we're projecting very strong results for this year, 2024. At the same way, we're the only industrial miner in Kalimantan for mineral sands, and we're producing at international standards following all, we have joined the UN Global Compact Initiative following all the sustainability targets like you would expect from any world-class manufacturer. But the same way we acquired Tisma and have two tenements, we're continuously looking at new opportunities with the target of consolidating the mineral sands industry in central Kalimantan to increase our production of zircon, rutile, and ilmenite. So in summary, we have two world-class tenements, one of them already in production with a very high assemblage value. We have customers all over the world. We started in 2020 selling mainly in Europe. Then in 2021, with the crisis in Europe, we shifted towards China. Last year, we shifted towards China and India. So we are covered worldwide. Selling is not something where we lose our sleep on. All of our sales have always been committed for since the beginning of our project. So everything we produce is already sold. It's sold in US dollars at an FOB basis, so we have no risk going forward. The biggest customer, the biggest country as far as consumer of mineral sands is China. Indonesia is a Belt and Road country, so a strategic partner of China. So China likes buying Indonesian products. They know Kalimantan very well. And so going forward, we still believe that we have significant opportunities, not only to grow our production, but also to find new tenements. The next step after having increased the volume of our sales now is to drastically reduce the cost of production by switching from third-party contract miners to doing our own in-house mining. So we have been doing the first tests. So going forwards, we expect to start mining ourselves and that to be able to reduce our production costs from this year, $1,500 per ton to around $450 per ton. And with this, I'm very happy to take any questions you might have.
Oliver, you have excited me. It's the very first time in my career where someone's talking about 100% margins. So you talk about the 100% margins from the sale of rutile. So when do you anticipate these sales to begin?
Well, as you saw, ilmenite, we started in February. It's difficult to predict exactly when we will have the final license. The next step, that we have managed to change the legislation in Indonesia. So we were fundamental in pushing the government to change the regulation. Now that has passed, we have sent our samples to the mining department. So we're waiting for them to analyze them. So they have to recognize that it's over 90%, and then we should start selling. I hope it will be this year.
Very good. And I'm wondering if you'll be selling to your existing customers or if you've already started to market to alternatives.
It will mostly be alternatives. So most of the zircon is sold to millers of fused zirconia customers. So the ones that are buying rutile and ilmenite are different customers, but well known by the industry. I mean, everybody in the industry is selling to a relatively small amount of customers. So we all know all the customers in the world. There's not new hidden customers around. And our distributor, Wogan, an English company, very well known in off-market sales of minerals, has been in the market for many, many years. They used to be the distributor of Aluka, so we have access to all the customers worldwide.
Okay, so you've used that word worldwide and global throughout your presentation. So I'm understanding the global footprint of your customers. I'm just wondering about your global footprint, the intended footprint, because right at the end there, you said that the idea is to consolidate the mineral sands resources in Kalimantan. So I'm just wondering, once you've done that, is the vision to explore and acquire mineral sands businesses elsewhere in Asia and beyond?
It is a possibility, but I believe very highly in focus. Today, we have a very interesting project with Mandiri, with still a lot of things to do. We produced 12,000 tons last year. Our project calls for a production of 48,000 tons. And like I mentioned, we have a huge opportunity to drastically reduce the costs. After that, we have a second tenement, which can help us to accelerate the project, which is TISMA, and access to other ones. So before we look to the rest of the world, which is a great opportunity, I believe we have to excel first in our part of the world in Central Kalimantan.
I'm just wondering what opportunities have opened with a recent accolade, a Gold Environmental, Social and Governance Excellence Award from the Zircon Industry Association. And when I read the RNS, to paraphrase, you said ESG is not just a badge of honor, it's a way of being within the corporate world.
Yes, we were very proud about that award. Particularly in Central Kalimantan, where ESG is not something that has arrived, and we're probably the only miner that applies this. From the beginning, we used it as a base on which to build our business. And I think a lot of the results are because of the way we are doing things. At the end, we have to deal with the local population. At the end, we're very close to the local schools. We hire all of our people locally. With that, we have very good access to the local government in Central Kalimantan, but also with the central government in Jakarta, because we're not only a mining company, we also stand for all the programs the Indonesian government is looking for. And at the end, we do it because that makes our place a better place to work for our people and for the generations to come in that part of the world that still has a lot of things to learn and to develop.
Okay, so I've spoken to you quite a lot this year, and it has been focusing on accolades. But Steve says, "Hi, Oliver. The share price has dropped in recent weeks. What near-term news flow can we expect that will help this recover?"
Yes, at the end, I'm seeing the share price dropping, saying like you, on one side, that was caused by a fund in Asia going bankrupt and liquidating all of their assets. They didn't do it on a very disciplined way and just sold everything they have. At the same time, in today's world, all mineral sands mining companies have dropped in share price, which doesn't mean that the value of the company has going down. The next big news should be the license of rutile. We should also present our results in September, which we expect to be very positive. So there's still very good news to come. And the continuation, I mean, there's nothing miraculously new. We will increase our volumes and we will announce that. We will reduce our costs, which we'll be announcing, and you should be seeing in the results.
Okay, Darby asks, how much capital is required to get the second operation into operation? I'm not quite sure which second operation he's referring to.
That means TISMA. I guess what they're referring to is TISMA. I said it's not in production yet. We have the advantage that we already have a project that is in production. So at the end, we will repeat exactly the same thing we did in Mandiri. Our idea today is to start with 24,000, a mineral separation plant at 24,000 tons, immediately go into our own mining, and then to grow to 48,000 tons. So our projections today is a minimum of $15 million and $25 million to have the full project, probably from cash to production. So from the moment we receive the cash to when we start producing, it would take us around 2 years.
Okay, Martin asks, how do you manage your information technology and reporting, especially for the government requirements of reporting?
We have a structure first within Kalimantan. So our offices are in Palangkaraya, where we have our accounting, human resources, and other services. And everything that's finance and cash, we control out of Hong Kong. So I have a very small team in Hong Kong to control cash, and the rest we do locally out of Palangkaraya. Reporting is not very difficult. What it is, it's very disciplined. You have to make sure you report on time every 3 months to the local authorities. At the end, we're mining for 3 products. So it's not the complications, it's more a discipline.
And in terms of discipline, are you finding that there are any disciplinary challenges working in Indonesia?
Sure they are. At the end of the day, we are mining in the jungle, very far away from everything. This is probably the most remote part of Indonesia and in Kalimantan, which makes everything much more difficult. But I mean, at the end, there is not enough mineral resources. There's not many new places to find it in the world, and this is the new source of mineral sands in the world. So we have to adapt to what we have.
And how would you describe where you're operating in terms of its alluvial richness?
At the end of the day, I mean, there's mainly two sources. Most of the mines you would know in the world are next to the coastline, so they were moved by oceans. We're next to the Kahayan River, so these are sediments that came from the Schrader Mountains in the north, and then were moved with the beds of the river. So what we find is the pockets that are left behind as the river moved through the area.
So you mentioned the sale of some stock by a fund. Steve's asking a follow-up question. He says, has that bankrupt fund now sold all of their holding? Are you aware of that?
We believe so. And I believe I mean, right now, if we see, there's still a push of about 3 million shares, which is a very relatively small amount. We have 461 million share in circulation, which should then take pressure away from the stock. But again, my responsibility and the one of management is to focus on the operations, and I'm sure the share price will follow.
Okay. Ash asks, what about the possible 30 million shares waiting to be converted by a US fund?
But they don't, if you look at it, it's at $100 US per share. So I'm not sure that those will be converted.
Okay. So you had your milestone shipment of that monazite-rich zircon concentrate to that customer in China. That's in the public domain. I'm just wondering about the cash generation from that first shipment and whether there will be follow-up shipments from that.
Sure, it's a byproduct, Sarah. So as we produce zircon, which is our main product, we will always have byproducts of ilmenite, of rutile, and of monazite, and then we will continue selling them as we produce them. And as we have done today, everything that we produce is sold in advance. So we have a contract for everything we produce. So in the moment we get a lot of 100 or 200 tons, we ship to Banjarmasin.
Okay, final question for me, because I'm trying to visualize the operations that are going on in the jungle. And I'm just wondering about personnel. Is it difficult to get the trained up personnel, the workers in Indonesia, or whether you're training them up, whether there is a rich talent of jungle ready operators?
Yes to everything you said. Indonesia is a mining country. It's one of the largest mining companies in the world. At the end, we are in a remote area. So it's a combination of both. It's a very young country. Indonesia is one of those countries that still has a very large growing young population. So it's easy to find workers. Trained workers, usually we have to get from other areas of Indonesia, from other mining operations, and then we train them. I believe we have the best work opportunity in the region, so people are happy and proud to be part of our company. So we have never had a problem to attract people.
And we're also very happy that we've managed to get you onto our webinar. I do appreciate that it's the wee hours where you are. And I just want to say thank you very much, Oliver Hasler, the Chief Executive and Chairman of PYX Resources. It's always a pleasure. Thank you.
Thank you very much, everyone. Bye-bye.
Bye. But it is hello to our next company, which is Helix Exploration. Now, my sources tell me it is officially the best performing IPO on AIM so far this year, up 2.5 times since coming to the market only 3 months ago in April. So it is a helium exploration and development company focused on helium deposits within the Montana Helium Fairway. This is the fairway that extends from Wyoming to Saskatchewan in Canada. And this week's news is that construction is underway for a road and a well pad. I'm delighted to be joined by the chairman, David Minchin. David, good to see you, and now it's over to you.
Nice to see you, Sarah, and thank you for that good introduction. Thank you as well to Oliver, who gave the presentation before us, a very interesting deck. Sarah was interested to see 100% margin. Here's a new number for you, Sarah, 197% IRR. That's the number from our scoping study. So yes, I'm David Minchin. I'm here to talk to you today about Helix exploration with our portfolio of low-risk helium exploration assets in the state of Montana in USA. It's been a big year for Helix since we listed in April via an oversubscribed IPO. And as Sarah mentioned, we found out just yesterday that we've been the most successful AIM IPO by percentage gain so far in 2024. We're up about 2.5 times since listing, but still with a long way to go. Now, why do I say we've got such a long way to go? Well, by limiting amount of shares we took, limited amount of cash we took in the IPO to only £7.5 million from an offer book of over 22 million. We've only got 120 million shares on issue. That means that with a share price bouncing around 25p, we've got a market cap of about £30 million, which is a long way behind our other listed peers, such as Pulsar on the TSX with a market cap of just over £50 million, or indeed Helium One on AIM with their market cap just over £70 million. It also leaves us a long way behind our scoping study NPV8 number of $304 million. So we're looking forward to a very active Q3, which we hope will add the value to the share price, which we're currently lacking. We've got a long way to go. Currently, we've commenced civils over the weekend. We are on track to commence drilling in Ingomar, the first of our 2-well Q3 drilling campaign. We're looking to start that in early August. And we are fully funded for these operations and beyond. So how did we end up as the best performing AIM IPO of 2024? Well, it starts with the management team. The company was founded by a very experienced helium man, Bo Sears, our chief executive, who invested his own money into securing about 11,000 acres worth of leases over Ingomar. Bo is a very experienced guy. He's had 25 years experience of looking for helium, which in a commodity which is so closely tied to high-tech and high-value engineering and manufacturing processes. The size of the market 25 years ago was so small, there aren't many people who spent 25 years in this space. The second very important member of our board I'd point you towards is Mr. Greg Peters. Greg spent 10 years working as director of helium for Lind and for Praxair. Basically, if Bo knows everything to do with helium from the subsurface to the plant, Greg knows everything to do about helium from the plant to the end user. So between the two of them, we've got the full spectrum of helium knowledge at our fingertips. Our other independent non-exec is Keith Spiegelmeer. Keith is the big dog in the room. Every board needs a big dog, and Keith is our one. He's got deep experience of M&A, deep experience of selling big projects to big players. Bringing up the rear is for two London boys, Ryan Neitz, our finance director, and myself, who is the chairman in this exciting company. So the other reason we have ended up as the best performing AIM IPO of 2024, well, it helps to have the right commodity, and helium certainly is the right commodity. I've been in the helium space since the year 2000. And what I've seen is a story of continuous supply surges, continuous supply shortages and demand surges, driven by growth in medical and high-tech manufacturing applications, and which have seen prices increasing at a 20% CAGR over the last decade. So where the price used to be $100 an MCF, bulk products are now trading at over $500 to $550 an MCF, and end users, even significant end users such as the US Army via the US Defense Logistics Agency, are buying helium in various container sizes at a blended average price of over $1,000 per MCF. It's about 100 times the value of natural gas. It's a very high margin operation to be in. With the rise in AI, we're expecting global demand to be pushed further, and specifically with the CHIPS Act in the United States, which is onshoring a lot of the high-tech manufacturing from China back into the USA. We're expecting to see significant domestic demand increase in the United States, which is where Montana, perfectly positioned between the East Coast and the West Coast, is in an ideal position to supply those markets. I might have mentioned we were the best performing AIM IPO of 2024, and a lot of people say, why? Well, we've consistently delivered on our work program. We've delivered on it on time and in budget. This comes down to the management team and the hard work of people like Bo and his team in Montana, that we've had an exceptionally busy first two quarters of 2024. Q2 kicked off with our IPO onto the London market. As I said, it was a massively oversubscribed book, about 22 million in the offer book, of which we took down £7.5 million, $9.5 million, sufficient capital to cover our work program and beyond. IPOs are quite stressful, and many teams, sort of see that as the end point and can take a breather. For us, it was the starting gun, and we have been running hard since then. Less than 2 weeks after the IPO, we were able to announce a binding agreement to use the Cardwell KB150 D1D drilling rig owned by Treasure State Drilling in Oilmont in Montana. We were also able to announce a very important partnership with Petroleum Consultants LLC based in Billings in Montana. They are a well engineering group and have brought with them a wealth of local knowledge and connections to nearby operators, which ensured we're able to operate very, very smoothly in the state of Montana. Later in the quarter, we delivered on our advertised scoping study, which exceeded all expectations, certainly all of my expectations. It delivered an NPV8 of $303 million on an initial capex of only 19.7 million. We did a variety of things which has been able to bring the capital and the operating cost, including using modular plants, modular growth, and using byproduct hydrocarbon from the Amsden formation to feed into cogen, which kept all of the operating costs down and meant we didn't have to import grid electricity. That gives the IRR, which I told Sarah about, of 197%, and a net revenue of $605 million over a 29-year life of operation. That's after capex, that's after opex, that's after tax, that's after royalty. As I mentioned, helium is a very lucrative business to be in once you find the helium. Speaking of finding the helium. You would think that having Ingomar project with an NPV of over 300 million would be sufficient for us. No, it was not. We are executing plans which have been several years in the making. And so we moved on the acquisition of a project called Rudyard, which is a very special project for us. This is a proven helium discovery with helium flow to surface at up to 1.3% helium, decent flow rates. I don't feel the acquisition has been fully understood or valued by the market. It's part of a bigger plan of the companies to organically grow the company through strategic acquisition of low risk exploration and appraisal projects. It has contingent resources of 480 million cubic feet. That's an in situ value of more than $250 million. In-house estimates for NPV are between 100 and 150 million. Analysts have put a target price of 93p on the Helix share on the back of this acquisition, while we're still at around 25p. We believe we're undervalued. The vendor of the project believes that we're undervalued, which is why he took the majority of his fee in shares. But I'm not worried about being undervalued because we're fully funded, we're able to appraise Rudyard to unlock the value of the acquisition without having to dilute long-term shareholders. And that's a very important principle of Helix, to act in the interest of our long-term shareholders and to minimize dilution through organic growth wherever we can. So what's next? Our immediate focus is on drilling of Clink-1, which is testing our flagship Ingomar Dome project. Ingomar has got a potential 2.3 billion cubic feet of helium in a stacked reservoir system sat on top of the Sumatra thrust in a domed anticline. Importantly, this is not a wildcat well. Non-flammable nitrogen gas has been identified in every horizon, in the Amsden, in the Charles, and in Flathead. Flathead is our primary target. It's the main regional reservoir hosting primary helium production across Montana. Charles and Amsden are upside, but it's upside where gas has already been discovered, 195 foot in the Amsden and between 145 and 175 foot in the Charles, with even gas being identified in the Flathead, 10 to 26 foot identified in a wireline. None, it was never flow tested 6 miles down dip away from the crest of the closure. So where we're drilling in Clink-1 on the crest of the closure, we're hoping for some very positive results. We say that nitrogen identified on every horizon. That's significant because every helium find in Montana has been associated with nitrogen. We also know there's helium in the system because shortly after collecting these licenses, Bo did a gas and soil anomaly across a survey across the entire closure, where he identified the highest helium and soil anomaly he's ever seen, adjacent to the Hilton wellhead. So we know this system is no different to any other system that is found in Montana. Where there is nitrogen, there is helium. So we're drilling at Clink-1, which we've already commenced with the starting of the civils work. All we're testing the grade and the flow rate from our various horizons of our 3 stacked reservoirs. So we're able to appraise the closure and, fingers crossed, be able to announce a commercial discovery in a few months' time, in a few weeks' time. After that, we'll be moving the rig and the services on to drill in Rudyard. Now, I've already said Rudyard is a very special project. It's a proven helium discovery. Geologically, it's very, very similar to Ingomar, by which I mean that it's a stacked reservoir system on top of a major structural fault, which is acting as both the releasing mechanism and the migration pathway for helium. The difference is, as I said, this has already been proven. It's already got helium at 1.3% and a decent flow rates in 2 discovery wells. You can see the map on the right-hand side there. The discovery wells were drilled at the crest of the closure. The section, the 628-acre section where the discovery was made, belonged to a landowner other than the one who we did our deal with. We weren't able to get access to those. So we're drilling just to the east of that closure, the Darwin number 1. There's 484,000 cubic feet of helium gas in situ in contingent resources. According to our CPR, all we need to do to convert those contingent resources into reserves and to be able to declare an economic discovery is to conduct a 30-day flow test. If it's flowing at the rates which we saw in the open hole drill stem tests, which we've got the historic results for, then we'll be able to declare commerciality and accelerate Rudyard into production. So the current situation is we've got 2 low-risk exploration and appraisal projects with combined NPV somewhere between $400 and $450 million, and an undervalued listing with a market cap of only £30 million. So the question is, when and how will we be able to unlock this value? Well, the how is with the drill bit, and the when is right now. This process has already commenced with construction of the civils. You can see the photos on the right-hand side of the roadway, which we saw. These photos came over the weekend. We're constructing a 7.5 mile long roadway, snaking across the plains to the well pad. After the pad has been constructed, we will be able to commence mobilization work. And expecting to start drilling in early August. So for the next 3 months, we have a cascade of news flow. There will be, in a few weeks' time, we will be announcing spud. After that, we will be obliged to announce any significant gas shows which we identify as we drill through the Amsden and the Charles and Flathead formations and beyond into the fractured basement play in the Precambrian. On completion of the well, we'll run wireline and be able to announce any significant looking gas columns there ahead of our testing program. We'll then need to case and cement so we can perforate, take our first gas samples. First gas samples will allow us to ascertain the grade of the system, and then we can move directly on to our well testing. So the well test will be 30 days. We'll be able to take the results from the well testing, feed them directly into the scoping study, and announce, hopefully, not just commerciality, but also give an idea of what the economic returns of this project will be based on the parameters which we use to define our scoping study. And the great thing is we're operating in Montana. I suppose that's a final part of what's made us the best performing IPO of 2024, is that we're operating in a low-cost jurisdiction, which is near to major end users. Operating Montana is a dream. Both wells came in below expected costs when we went out for tender. So we've taken the unusual step of publishing our quoted AFE costs. It's important. It demonstrates the potential of the company to deliver cost-effective exploration and development in the state of Montana. Exploration and development. Development is important. We're here to take projects into production. As I said, we raised $9.5 million in April's oversubscribed IPO, which means that we're spending less than half of the cash raised on our current exploration program. This ensures that we're fully funded for exploration and beyond. So that allows us to progress directly from appraisal into detailed engineering, into getting a costed construction program, and to orchestrate as far as possible non-dilutive construction finance through debt, through pre-sales, and through other methods. Looking over the horizon, there may also be additional project pipeline activity as we position Helix through organic growth. to become a disruptive new force, a disruptive supplier of helium to the North American market, a sort of company that shifts the needle by focusing on large-scale, low-risk, drill-ready targets and projects, which can shift the needle in terms of helium supply to the undersupplied North American market, and get the significant investors to sit up and take notice. So that's where we are now. That's where we're going to be in the future. The best performing AIM IPO of 2024 is poised on the cusp of continued exponential growth as we prepare to unlock the value from our portfolio of low-risk helium projects. What that means is we've got 2 great projects with large closures, stacked reservoir systems, proven gas, ready and waiting for the kiss of the drill bit. We're fully funded for exploration and beyond. We're looking to grow organically with a strong ethos of delivering cost-effective exploration and development to minimize dilution to long-term shareholders. What this means, it's the right time to be Helix. It's the right time to be in Helix. And I invite all shareholders, all long-term holders to come with us on this exciting journey. Thank you very much. And I'll hand over to Sarah for some questions.
You enjoyed that, David. You enjoyed that. You enjoyed that. Let's hope that you keep that enthusiasm and those smiles going.
Look, it's a fantastic project. It's an exciting project to be in because things are moving. Things are moving rapidly. We've only been listed for 3 months, and already we've got boots on the ground, roads being dug, rigs ready to start, and summer in Montana.
Right, Montana. So you said you're close to end users, but when I looked at slide 9, I was thinking, gosh, that looks lonely. It's quite barren. There was just one truck there. But talk to us about your neighbours on the Montana helium fairway, because it's already hosting, producing helium sites. I'm thinking about North American Helium. They're there.
North American Helium are the largest primary helium producer in the world. And yeah, they are our neighbours on the same fairway, just north of the border up in Canada. It demonstrates that the thesis isn't just a theory; it's something that works. You know, people are already doing what we're doing and making money out of it. We're just doing what we're doing on the benefit of a quarter of a century of knowledge and experience operating on this very belt.
Okay, so Darby asks, if found, how do you propose to process the gas post wellhead and store the helium?
So we're looking at using pressure swing adsorption plants. That's adsorption. And it's basically, this is going to be a very simple gas to process because it's once you've stripped out the natural gas, which as far as we can tell is only occurring in the Amsden Formation, you're in a position you've basically got a bimodal gas. It's nitrogen plus helium. So it's a very, some helium plants need to be very complex if you're separating out carbon dioxide, if you've got H2S or other nasties. From historical well tests, we're not seeing any of those. So you use pressure swing adsorption to produce a compressed helium gas, which you can then just load into tube trailers and you'd be selling it to the mine gate.
And how confident are you that you'll be finding helium in commercial quantities? Now, I know you are Mr. Optimism, but right, just bare your soul and using hard facts. How confident are you will find helium in commercial quantities? So
people may look at the chance of success numbers in the prospectus. Chance of success numbers, I personally hate them because you either do or you don't. There's no 30% on a this is it's either there or it isn't. I have a great deal of confidence that it's there, and that's based on the knowledge of the system. And I don't mean my knowledge of the system. I mean Bo's knowledge of the system. He spent a quarter of a century working on this belt. He's put his own money into securing these licenses. He wouldn't have done it if he didn't think there was helium there. And he's basing that opinion on sound, factual, scientific evidence. That there is nitrogen identified and tested out of the Amazon Formation and the Charles Formation. There is gas identified and not tested out of the Flathead Formation. And everywhere where you've had a high-grade helium discovery on the Flathead, on the Montana helium fairway, it's been associated with nitrogen. So that combined with the evidence that we have where we've got nitrogen found adjacent to the wellhead in the Hillerson 1, which penetrated into the Amsden, which flowed nitrogen gas but was never assayed for helium. The upside is there to find it. And you know what? If it's not there, I'd say I don't know where it is, but I do know where it is, because if it's not there, it'll be in Rudyard. And we know it's in Rudyard because it's already been tested and it's already been proven. So, you know, it's the benefit of having 2 bites off the same apple, or in fact, because we're working on stacked reservoir systems where there's 4 reservoirs to test in Ingomar and 3 reservoirs to test in Rudyard, we're actually getting 7 bites off the same apple from 2 wells, which are only costing 4.1 million to drill both. So, yeah, I'm in a very positive place.
Okay, so you mentioned 2 bites of the apple. Therefore, are you aiming to establish 2 production hubs and quite soon?
That will be the plan, yeah. My plan would be to get both of them into production before the end of 2025. Maybe one first and then the other, to get the other one in mid-26, depending on finance arrangements, basically. But certainly when you're negotiating with major end users for helium, it's important to get diversity of supply. Say if you're the helium buyer for General Electric and you're producing your MRI scanners out of your manufacturing facility in California, and you've signed a contract to get all of your supply from a company in Ingomar, and then the plant goes down for maintenance, whether planned or unplanned. That's how purchasing managers lose their jobs. So you need diversity of supply so that you can sell directly to the major end users. You need to have 2 separate reservoirs, 2 separate plants, and that's how you can ensure that you get the best price for your helium and the best returns for your helium shareholders.
Okay, we've got 2.5 minutes and 3 more questions, please. So,
oh no, I'll be quicker.
So Bo is a big name within the industry. Then you've also got the big dog who's got the big experience in M&A on the board as well. So is that the plan, to be looking for other acquisitions even before?
Definitely, we want to grow the company organically. We've got other projects which we would like to target. We'd like to see ourselves growing to become an agglomerator in the space and focusing on the North American area, the area that we know best.
Okay, you've got the Cardwell KB150 D1D drilling rig from Treasure State Drilling. You're going to be using that for the aggressive Q3 appraisal drilling campaign. Should you want to extend that drilling campaign, would that rig be available for you to use?
Certainly, yes.
Very good. And finally, David, Marion has given you loads of compliments, and he says, do you have the reporting procedures in process and also things like checking seismic activity through the drilling?
So we've got a full set of well monitoring, well management, working with petroleum consultants to ensure that the operation goes as smoothly as it possibly can. There is, of course, it's an operation in a remote part of Montana, even though we're well connected to service providers and lines of service. There's still things that can go wrong during the process. However, we're giving it the best shot that we can with the best team that we have.
Lovely. David Minchin, Chairman of Helix Exploration. It's been a pleasure.
Thank you very much, Sarah.
You're welcome. Long may you remain joyful. So is our next company joyful? It is Fulcrum Metals. It listed on Valentine's Day last year. It's focused on mineral exploration and development in Canada. It's advancing. It's environmentally friendly, and this is important, environmentally friendly tailings processing assets, tech hues and sylvanite, and focusing on its drill-ready gold exploration projects in Ontario. Concurrently, it is identifying low entry-level assets and, of course, is crystallizing value for its shareholders. Ryan Mee is the Chief Executive. Good to see you, Ryan.
Yes, it's good to see you again, Sarah. And, just thanks to the previous presenters, enjoyed their slide decks. And obviously, I'm here to talk about Fulcrum and what we're up to. Obviously, everybody, standard legal disclaimer there. Now, just a brief overview of the company. So we are listed on the AIM market in London. Now, we do have a very focused business model. Now, we are primarily focused on transforming mine waste and tailings into sustainable resources and potentially ecological assets in Ontario. And that's through utilising extract process solutions, non-toxic technology. Now, importantly, no one is addressing these historic tailings in Ontario. And indeed, Fulcrum are not just first mover in trying to address these tailings, but we're also the first mover with this technology in Ontario. As a second side to the business, what we are looking to do is leverage the portfolio of very exciting, highly prospective exploration projects that we have, and that's, as you say, to crystallize value and further opportunities to the business. We have demonstrated that we've come to market. Not only are we a capable management team, we've also got a very good track record with M&A and deal making since we've come to market. Now, what are our short-term objectives for the company? What can people be excited about to look forward to? Now, in terms of the gold tailings, we have two projects roughly in the same area. We're going through phase development programs. Now, in the short term, we've already put news out on the phase one at tech hues, which was, we're excited about those results. But now we're focused on optimizing that leach testing and advancing into a phase two conceptual study. And of course, alongside that, looking at all the permitting. With sylvanite, which we acquired a bit earlier this year, we are currently underway doing a phase one testing and sampling program. And that's so we get a representative sampling across the tailings body itself. So we'll be looking at the grade of gold, the content, and of course the leaching. And subsequent to that, we'll be looking at optimizing that leach testing. What we are doing to cement our position in Ontario is we are, under discussions with Extract and their technology and exclusive licensing of that in regions in Ontario. And part of our strategy there is also to establish a testing lab there in the heart of Timmins for reasons I'll discuss a bit later on. Obviously, with our remaining exploration assets, we're reviewing opportunities with regard to those. Now, if we look at the two sides of the business, so we've got the exploration assets. Now, we actually recently disposed of our Saskatchewan uranium portfolio at a very good uplift to the capital expenditures that the company bore. So over the term of that disposal of 4 years, we're looking at 3.36 million Canadian in cash and shares. And the Terra Balcanica, the company acquiring those assets, that committed to 3.25 million in expenditures. So that gets to leverage that expenditure over our investment in those uranium assets. We've also got two very exciting drill-ready gold projects. One is Tully, which is in Timmins. It's got an existing resource, and there's an incredible upside in terms of expanding that resource. And in actual fact, just about a month ago, a mine just a couple of kilometres north of Tully, which is 1.2 million ounces, was taken private in a $100 million Canadian dollar deal. So we know that's in the right area, and it's a very typical Timmins setting for a deposit for an expansion. We also have Big Bear. That is now we've identified drill targets, and that's ready there to go after a discovery. So they're both there for us to capitalize on. Obviously, the main focus of the company, and that's what I'll be focusing on for the rest of this this webinar, and that is, what about the tailings? Now, we are using non-toxic, innovative technology, and that's why it's sustainable. The tailings are already there. We're using non-toxic, environmentally friendly technology. So what does our asset base look like? So we've developed a Kirkland Lake tailings hub with a non-compliant estimate of up to just over 200,000 ounces of gold. We've got partnerships with Extract, who have a global, commercializing agreement with Bechtel. Bechtel are a massive, massive company. These are, $20 billion a year revenue kind of companies. They provide significant EPC expertise for us as we move forward. Our first phase sampling and testing, as I say, there were outstanding results. What we managed to do is confirm the gold grades were actually, what we came back with was nearly 17% higher than what the historic grades are. And we're hitting nearly 60% in terms of gold recoveries already straight off the button. And what we also know is, obviously, Ontario and Canada, it's a huge mining country, has been for over 100 years. So there's a multi-billion-dollar tailing target market for us to scale into. Now, what exactly are tailings? Now, every mine produces waste. These go into ponds or lakes or whatever it was at the time. Now, that production, that doesn't recover all the precious metals. So that means there's still some gold left in the tailings, and that's where our opportunity lies. And of course, it's a growing problem. Mining happens every single day. So those tailing stocks, they're always growing. And of course, in these tailings, you're going to have heavy metals and chemicals, and these leach into the surroundings. So that naturally leads to concerns from an environmental point of view, but also the structural integrity of these tailings as these get filled up. One of the real reasons why I love tailings, and that is the perceived lower risk. Now, we know that there's metals there. It's from historic mine production. It's very well documented. And we have the opportunity to extract these precious metals, but that's without this expensive diamond drilling operations that you need to outline a resource. So that, therefore, with the lower cost, the significantly reduced drilling programs that you need for that offers us a much nearer term opportunity for cash generation. In terms of the market in Canada, there's actually two sides of the coin here. From the environmental angle, the government have a huge liability to go and clean up these tailings. They don't have an answer for it at the moment. We plan to give them one. That liability is, over $10 billion. This was calculated a number of years ago. And then on the other side, in terms of the actual metals that we can extract from these tailings, Natural Resource Canada, they estimated, and this was about 6 years ago, for just the gold in these tailings, they're worth more than $10 billion alone. But the big snag with tailings is you need the technology that works. And that's why we're excited about the results that we've had so far. That's why we're excited about the extract technology and the opportunity. Canada is obviously, a mining behemoth of a country, one of the most significant gold producers globally. Now, Ontario actually accounts for nearly half of their gold production. As I've just said, the government is subject to this very large liability to go and clean up these tailings. Now, what we're doing is, we need a focus. So we're focusing on, established mining towns of Kirkland Lake and Timmins, where there's a significant past gold production, well in excess of 100 million ounces of gold over the last 100 years. What we also know is that there's over 400 tailing dams privately held around Ontario that the government have to monitor and come up with a plan to go and clean them up. So we've just got a little map here now. These are the two areas, Timmins and Kirkland Lake. And on here, what you can see is all of the active and historic or legacy tailings in those areas. Now, in those two areas, you're looking at around 20% of all of the tailings in Ontario. So this is why, you know, we've got these targeted areas. It gives us a very good focus area. Obviously, in Kirkland Lake, we've got 2 projects already. So what do these 2 projects look like? So they're called Tech Hughes and Silvernight. It's actually along the main break of the Kirkland Lake. It's actually where, you know, historically there's been 7 multi-million ounce gold production mines, all from the same ore body, which is quite incredible. It's produced over 24 million ounces of gold. Now, in terms of the historic estimates of what we believe or historically reported at these 2 tailing sites, is a combined nearly 11 million tons of tailings. And you're looking at, I think, 205,000 ounces of gold. Now, how do we move these forward? How do we bring these in from a concept into reality? Well, we have a phased focused testing program at Tech Hughes, which is underway. It's a 4-phase program, which we're doing with Extract. As I say, we've already completed phase 1. I'll go back, you know, I'll cover the results of those in a moment. And then you've got the phase 2, which is the conceptual study, the initial conceptual study. And then phase 3, which is a more detailed sampling and leach testing program. And that will lead naturally into a phase 4 economic study. Now, we believe that complete 4-phase approach we can do in around 15 months from start to finish. Now, in terms of Silvernight, we have already announced that we have started that phase 1 process. So, you know, the samples have already been collected from site. They're on their way to the lab. So, you know, we look forward to the results of those. Now, in terms of Tech Hughes, now this is about 6.5 million tons at 0.66 grams per ton gold for getting off 440,000 ounces. So what we've done is we selected a number of locations across the tailings body to give us a representative sampling across there. Now, what we've done is we cross-referenced the samples that we took with the historic, so we have a direct comparison. Now, we have an average weighted grade of just over 0.7 grams a ton. Now, when we directly compare those to the historic results, they're just over 0.6 grams a ton. So we're nearly 17% higher, and that could be really material for us. The second part of that phase 1 is the actual leach testing of the tailings material. So we made a composite of all those. We sent them, you know, we batch tested. So the initial unoptimized leach testing actually, you know, we achieved something quite incredible, actually. You know, 59.4% recovery rates. Now, what you need to understand here is this is dirt out of the ground. We have done no processing whatsoever to this tailings. We've done no treatment whatsoever to this tailings. We have simply poured it out the ground, composited it up, and we've done our initial batch test leaching. And don't forget, you know, Tech Hughes, no one's ever done this before. There wasn't even any metallurgical information about this tailing. So we've done all of this from scratch. So to actually to be able to go from a cold start where no one knew anything apart from we know there's gold in there, we've got a really good understanding of the tailings now. And we've achieved an outstanding initial gold recovery rate. For you know, just for comparison, if you're looking for other kind of traditional methods of extracting this gold or recovering this gold from tailings, you're looking at 35 to 40% max. So we're already clearing the benchmark that we already set out for ourselves. And indeed, you know, optimization, leach testing is ongoing at the moment. We'll probably run that, continue to run that alongside the phase 2 conceptual study. Now, why do I believe that we've got an economically viable project? Now, fortunately, there's tailings all around the world, so there's other DFSs that you can look at. Now, a fairly closely comparable project is one out in Western Australia. It's called Windara. That a DFS published in 2021. Now, that 5.5 million tonnes, 150,000 ounces of gold, but they could only recover just under 54,000 ounces of gold. And like I say, other technologies, you're getting 35, 40%. So you can clearly see they're getting around 36% there. But even with that, they've got a very positive investment rate of return. They've got, fairly, for the size of the deposit, they've got very impressive, operating cash flow there. And ultimately, we believe we've got the best technology out there in the market. Now, why are we so confident? Well, the real key to this is all in the IP. It's in the chemistry. It's not in the machinery. The machinery is, is very bog standard. It's off the shelf. That's why the technology works so well. And also, further down the line, it's going to give a lot of other benefits because it means we don't need to go and buy specialized equipment, which is A, costly, and B, takes a long time to arrive. I've known Extract and the principles of Extract for quite some time now. And they've put a lot of money into the R&D of this technology, making constant improvements and adaptations, and that will just, continue. And it's a very novel, simple separation technology. Now, we're focusing on gold. Now, we need a very focused strategy to be able to penetrate into the market in Canada. So we focus on gold very purposefully. We focused on the area very purposefully. But what we do know is that actually this technology works on a variety of different metals in complex oxides, both refractory and non-refractory. And also actually, separating hydrocarbons from oil sands. So we're getting, partnered up with some serious technology. And of course, the technology also needs to have some benefits to the environment. Now, there's some very strong ESG and environmental implications with this technology. It's non-toxic, it's non-cyanide, it does not give off any residues which are inert, it's non-acid generating. It's actually got very little water consumption, which can prove vital to the survival of any mining project. And we know that, through testing in various situations, that this can dewater the tailings for dry stacking, which directly addresses those issues of stability of dams. Now, I appreciate Extract is a private company, and there's not a whole lot about the technology on the internet, which is a question I get all the time. Now, but if you focus on the information that is available in the public market, and of course, as we develop our projects, we'll be able to divulge more information on that, particularly as we do the phase 2 conceptual study at Tech Hughes. Now, what we do know is Bechtel are a multi-billion-dollar annual revenue company, and they signed a global commercial alliance with Extract to take the technology all around the world. And the president of Bechtel, he said, this collaboration is going to transform the industry. It's words that should not be taken lightly. It's words that should be taken on board, especially when they look at Fulcrum and the opportunity in front of us. And there is another publicly listed company out in Nevada who've just completed their phase 1 study. It's an operating mine. It's a silver. It was uneconomic because of the low recovery rates. But what this technology is showing is that they can double the recovery rate and make it economic once more. And that's, not just the recovery rate, but significantly cutting leach times and ultimately reducing costs.
You've got 1 minute left, Ryan.
Yeah. Okay, so I'm going to very quickly try and wrap this up, but this is a significant opportunity for Fulcrum shareholders to transform mine tailings into sustainable resources. There's a number of environmental benefits, regenerating nature, potential to reduce the carbon and waste pollution footprint, but also to the local economies. So we're about to bring new sustainable resources and job opportunities to the table, but importantly, enables the reconnection of local communities, governments, and investors that are increasingly demanding this more mining, biodiverse, and environmentally and climate positive change. Very simply, through our model of having a testing lab in Timmins, which would only be the second one globally, that's going to open up a key access point throughout Canada, and of course, a lot of commercial opportunity. That in itself will lead to commercialization and cash flow potential in terms of our own projects, but also being able to bring other companies' projects through the door into the lab, and and there's going to be further commercial opportunities for us on that front. So, in summary, Fulcrum in a very short time of building a tailings business. We know we've got gold. We know we've got exceptional partners in terms of technology and engineering. We've got a number of deals which is going to help us cement that position. So we're really primed for significant commercial revenue opportunities in a truly multi-billion-dollar industry. The exploration side of the business, we've shown that we can do M&A deals through the disposal of the uranium assets. We've got two really exciting gold assets as well to review the opportunities for. And I think that's me done, Sarah. So I'm happy to take any questions.
I was going to say, we're not quite done with you yet. We saw you go all doe-eyed when you talked about tailings. You're a self-confessed tailings man, and I now understand about the potential. But you fell out of love with uranium. You've told us that you achieved, a decent uplift when you sold the uranium assets in Saskatchewan. But are you limiting the company, do you think, by focusing on one area only, and just because tailings are close to your heart?
Absolutely not. We said from the get-go, uranium was an industry which, we've seen the direction of travel in that industry with net zero. So that was an investment to be able to crystallize significant value for shareholders. It was never our primary objective, but what we have done is ultimately been able to close out a fantastic deal for shareholders. And actually, it's one that means that when we haven't exited the uranium trade, inverted commas, but actually we've leveraged the position whereby we don't need to spend any money on those uranium assets. We're using someone else's balance sheet. Those expenditures that are committed to spending, that's going to directly leverage, I think they're going to be very successful. I really like those uranium assets as it happens. So I see us delivering a lot more value from that uranium investment. Now, yeah, I love tailings. Literally, we talk about scale. You can either have project scale or you can have industry scale. Now, it's the industry scale which really excites me. And we've got a business plan set out in front of us, which I think that is going to enable us to not just be first movers, but be a fairly dominant tailings company in Ontario going forward. I think it's the scale or the potential is it's get your calculator out kind of stuff. But I know that we listed as a pure exploration company, but it's our job, not just as the board. Don't forget, I own nearly 14% of the company. So these decisions aren't taken lightly. Sometimes you've got to be brave. That's what we have been. But hopefully investors can see the size of this opportunity in front of us, because it is, like I say, it's not about project scale. It's about industry scale. It's about repeatability.
Okay, so you love tailings. You are, in essence, the consummate recycler of precious goods. But let's talk about another relationship, the relationship that you have with Extract. It doesn't sound exclusive. It sounds as though Extract has got alliances with other companies. Now, what would happen if your agreement, your partnership with Extract came to an end? What would plan B be for Fulcrum?
Yeah, look, I mean, let's just kind of explore what those relationships look like at the moment. So obviously Extract and Bechtel, they're going around all those major mining companies all around the world, Australia, Central Europe, North America, South America, and not exclusively gold. They're looking at iron ore, they're looking at lithium, they're looking at silver. So a whole myriad of things are going on there. What that means is that Fulcrum have an opportunity to actually bring a very synergistic opportunity to, let's call it the wider group, i.e. the three companies. Don't forget, Extract are an IP company. They want this technology out there. They want it deployed. They want it developed. Bechtel, they're an engineering company. Neither of these companies are interested in owning projects at all. Bechtel want to go and build plants. So what Fulcrum are doing is putting a business model to them to say, hey, we've got a very good idea. We've got very good contacts in the industry now, which are always expanding. And ultimately, this isn't just, we've just come up with this overnight. We've got a pre-existing relationship there. And it's taken us 8 months to, in these discussions so far. So if anybody wants to come to the table, then, they've got the best part of 8 months catch up plus a lot of inbuilt trust and confidence between the three groups.
Okay, so the non-toxic technology, it works. You've given the evidence there. So you have this smorgasbord of base and precious metals. Where do they go once you find them? What's the protocol? What's the system? Who's going to take them off you?
Well, look, ultimately, we will reprocess the tailings through a plant on site. Actually, the interesting thing about, in particular, Tech Hughes and Silvernight is they're less than 3 kilometers away. So there should be some synergies for us there to actually reduce the costs. But essentially, we will reprocess the tailings. We will come out with something which will then be sent off to be, we might concentrate it on site, but we're not sure on that just yet. It depends on what the economies of scale look like. But this is dirt. We're ultimately separating dirt from the metals. So, it's a relatively simple process as long as it works. We know it works. So, we truck it off to a refinery to get it smelted down.
Okay. You're essentially saving the environment, making things that don't leach into the ground. I'm just wondering if the First Nations, the First Nations or Third Nations and the Ministries of Mines in Ontario, are they supportive? Are they 100% behind you?
Look, we've had several meetings with both regional and provincial government representatives for in the mining industry. They've seen some of the data that we're coming up with. They're really excited. Like I say, no one's doing this yet. These tailings are sat there, and all that's happening is it's a case of let's not let them get any worse. They don't have any answers now. I firmly believe that we do. So, we've got significant support from the governments. They want us to be out there looking at these tailings. They want us to be out there bringing a new testing lab and this new technology to Ontario. First Nation groups, they, like I say, the tailings have been completely ignored. It's a case of as you are. Now, if you consider there's been 100 years worth of mining activity in Ontario, that's a hell of a lot of tailings, a hell of a lot of environmental concern for First Nation groups. So quite rightly, they're looking to, demand better of the government, better of operating companies. So, through the discussions that we've had, they're clearly very supportive of what we want to do. They want to be part of what we're doing. Discussions are underway as far as that is concerned. So it's we're a very happy camp at the moment.
Very good. And very quickly, so legacy, divestment of portfolio projects to date have been at a premium. Are you in any rush to divest your current assets?
Absolutely not. For example, Tully, it costs us less than $1,000 a year to maintain that property. I think that Timmins Tully property is very similar to Hoyle Pond. Started off 100,000 ounces, just like Tully, got on top of the vein stack, followed it down. That was in the early 1980s. 30 years later, it's still producing. It's 3.5 million ounces, year to date. So we don't want to let it go cheap. But at the same time, if we get a reasonable deal in the offing, then clearly it makes sense to try and maintain some level of interest in that project, but also to reinvest into what is an industry scale tailings opportunity. We're under no pressure from in terms of Big Bear exploration either. We haven't talked much about Big Bear, but there's some pretty exciting drill targets on there. We developed a high-grade gold corridor. We've got a full set of high-quality geophysical surveys on there. It's a very good property. It really is. So
another webinar. It's another webinar.
Perhaps.
Yes. Come back and talk to us. Ryan, I love tailings me. Thank you very much. Ryan,
I love the tailings opportunity, me.
I like that. I like it very much. And I'm hoping that the shareholders will too. Ryan Mee, Chief Executive of Fulcrum Metals, thank you very much for joining us tonight. And come back and talk about the Big Bear project another time.
Absolutely. Thank you very much, Sarah.
You're welcome. So there you go. 3 chief executives getting very doe-eyed about their projects. Is the final presenter equally doe-eyed? We are talking about Metals One. It listed just 1 year ago, and it is advancing strategic minerals projects in Finland and Norway. Its maiden JORC inferred mineral resource for its black schist project in Finland is 57.1 million tons. That's more than double the previous estimate. So the bunting came out for that JORC inferred mineral resource. Now the total value of the company's in situ metals across its portfolio is now standing at some $3 billion. That in itself should make the chief executive, Jonathan Owen, equally doe-eyed. Jonathan, over to you.
Thank you, Sarah. No, absolutely. I was cautious about throwing big numbers around, but having just sat through 3 rather compelling investment propositions, offering exposure across commodities and life cycle stages, big numbers being thrown around, I thought I'd better follow suit, but you've done it for me. So yeah, within 12 months of listing, we've amassed $3 billion worth of strategic metals in the ground. Plus, we've got our independent economic assessment or preliminary economic assessment in the pipeline on the way, hoping to have that done in Q4. And that'll shift a lot of that value onto the balance sheet and underpins, our transition from a sort of explorer discovery play truly into project development. So it's been a very, very quick 12 months for us as the team, and things are only accelerating. So let me take you through the latest corporate deck. This is recently updated following the resource estimate that Sarah, you alluded to a moment ago. So quickly through the disclaimer, please read this in your own time, and we'll move through to an overview of the company. So Metals One, as we've just discussed, we listed in end of July last year. A tough market, I have to say. I think we're one of only 4 to successfully list on AIM in 2023. But we were active straight out the blocks, drilling in Q4 in Finland and in Norway as well, and then various assay work, mineral resource estimate updates. And now we're going straight into the preliminary economic assessment stage for the finished project. So who are we? What are we doing? Metals One, really our focus is on identifying and developing sources of the technology metals or strategic metals, nickel, zinc, copper, cobalt, etc., that are required to underpin the green transition and the digital transition in Europe. With Europe, we'll talk about the legislation in the moment, but there is a raft of new legislation that's come into place that is really driving the onshoring of these, the sources of these raw materials to Europe. So placing less dependence on traditional sources, which can be Russia, China, Indonesia, etc., and bringing both security of supply, but also having a view on the sustainable nature of these sources as well. So we're very much about identifying low carbon sources within Europe for the European market. So we came to market in July last year. We came to market with two cornerstone projects. We have the Rana project in Norway. This is a JV with Kings Rose Mining, listed ASX. We have a farming agreement there. It's worth around about £8 million in terms of free carry to us. So Kings Rose are on the ground doing the work and paying for that, of course, and buying into the project. Currently sitting at 80% ownership. That'll move as they continue drilling this next few months to around about 50%. So our focus really as an operational team is very much then on the Blackshist project in Finland. The Blackshist project is a project we acquired off Blue Jay Mining. We actually optioned it up a couple of years ago when the nickel price was a lot lower than it is today. So that value is really, already locked in there. And, we inherited a 28 million ton resource and have expanded that now to, as you say, nearly 57 million tons, Sarah. And that's quite an important point for us and important milestone for the company, because that allows us the critical mass now to accelerate the roadmap to generate free cash flow, to ultimately build the mining operations. And as I mentioned, it allows us to shift the exploration expenditure now to the balance sheet, put some economics around the project NPV, IR, etc., and look for alternative sources of non-dilutive funding as we move into the next stage, which I'll go into in a bit more detail in a moment. So as I mentioned, it's all about following the fair winds and the fair seas of the European drive towards the green energy transition, digital transition, and the demand for, by 2030, 10% of those raw materials having to be sourced within Europe. And there aren't many sources of those materials currently in Europe, and not many projects in the pipeline. So we're one of only a handful, which is good for us when we come to look to EU grants, etc. It's quite an open playing field. So a quick view on who we are as a team. So quite a broad range of experiences and skills. So I'm a mining engineer. I've been running mining operations across the world, mainly in Africa, also exploration operations. I was one of the founding directors of Helium One. So this is a couple of years pre-IPO. So I know David well and resonate very much with his excellent project in Montana. I'm a fellow of the Geological Society, so I'm unusually a mining engineer with a good solid understanding of the geology and the origination of ore bodies, such as the black schists. Alistair Clayton, our chairman, he is, as David called his team, the big dog on the board, senior guy, geologist by trade. In fact, he was a previous CEO of Finast, which became Blue Jay, which we then acquired the assets of. So he understands Finland and Norway, understands the projects as well. So he brings some historical context to it for us. So there is, in that way, there is continuity. While we're a new business as such, we have that continuity and sort of corporate understanding of what we have and what the potential is as well. Dan Mailing, CFO. So Dan's actually the founder of Metals One. He had the sort of original idea to pursue this opportunity in the market, to seek out the cornerstone projects, option those up, and then kick off the process of getting us listed onto the stock exchange and trading. So really the three amigos that sort of day to day are driving the company and the strategy. We're then supported by independent non-execs, Craig Moulton, Australian geologist and financier, nickel expert. So again, he's brings a lot of strength to the board in terms of understanding the nickel market downstream, as well as the exploration and processing, etc. We have then Sarah Minchin on the other side there, non-exec director, yes, related to David Minchin. Sarah is a Finnish national. She is really she brings the sustainability, the ESG, that is her speciality, the lead on the community side to the team, which is hugely important. Without social license to operate, it doesn't matter how good your asset is, you're not going to get it off the ground. And we've seen that in harder jurisdictions like Africa, but it applies to Europe as well. So we're cognizant of that, and we've got a lot of horsepower on the board with Sarah being there. Thomas Levine, Winton Willisey then represent the vendors of the two cornerstone projects. So these projects are acquired predominantly through equity. So they remain significant shareholders of Metals One. And also of note, Blue Jay has recently extended its lock-in with us as well. So they hold around just under 20% of Metals One, and they continue to be locked up now till December 2025. So that really sort of underlines their commitment to our investment proposition, really, and their interest in staying with us through the process. So as I mentioned, we IPO'd in July 2023, so we're just coming up to our 12-month anniversary. Again, a lot achieved. We currently stand at a £3 million market cap, which, and I'll come on to sort of peer comparison in a minute, which is it's low, and we've got a lot of room to grow and to grow that between now and really getting into the outcome of the preliminary economic assessment. Will that share price, that market cap, then to converge with the outcome of the PEA? And again, I'll talk to that in a moment. $3 billion worth of assets sitting in the ground. That's nickel, copper, cobalt, zinc. It's a huge number, and it's a big number for anyone. But our sights are to grow that to around about $10 billion. And that would make us a truly world-class asset in the technology metal space. I mentioned the £8 million investment carry. So the money raised during the IPO and later placing is really focused on developing the Finnish assets, the Norway assets that look after themselves, with Kings Road's participation and in investment on the ground there. So for us, our operating costs are very much covered by the cash in the bank. And so we've got a good runway in that respect. I mentioned the economic assessment. So we're moving unusually fast in this respect to quickly go through the stage gates of building a business case for a mine, moving towards a financial investment decision. And the PEA is the first step in that. Typically, you wouldn't see that for another couple of years at least with an exploration sort of discovery play. Like I say, we're moving into that development phase very quickly on the back of a solid asset in the ground that's going to be easy mining, easy processing, and with clients on the doorstep. So I'll first take a deep dive into the Blackshift projects in Finland. What we see here is the drill rig during the last drill program back in December 2023, so a few months ago. As you say, it's pretty low impact, self-contained operations, very little impact on the environment. Community is hugely supportive of these activities. In fact, we do have to chop a fir tree down now and then. These are forestry land. These are farmed forests. This isn't natural forest here. But the community is quite happy to come in and chop the trees down and take them off as firewood, etc. And it's a far cry from some of the challenges that we see some of our peers having in sort of more remote regions with indigenous communities that are all struggling or competing for resources, whether it's Sami, reindeer herders, etc. We don't have that issue this far south in Finland. So where are we in Finland? So we're central sort of east Finland, so quite a way down south. We're away from the major areas of the reindeer herders, the Sami indigenous tribes, and the Natura 2000 national parks. And reservations. We don't have those in our area. And the project area is really actually located across the Kainuu schist belt. It's a belt of around about 90 kilometers north to south. And we have exploration targets throughout this belt. Now, notably, we have R1, which is down the south. R1 it's the name of the original target before it was a resource. R being Rautavaara, 1 was the first target in the exploration pipeline. That was our 28 million tons that we acquired off Blue Jay. We've since then developed P5, which sits up in Paltamo to the north. And as you saw a few weeks ago, announced the 29 million tons that we have there. We then have a range of other targets across this area. In fact, we've got a significant expansion opportunity there. I put out when we first listed, it's a rather arbitrary number, but you've got to put out some stretch goals for yourselves and the team to chase. And we put the number out there, 200 million tons. That's where we need to get to. That's the $10 billion worth of assets in the ground that we need to chase if we want to be world class. And we're already at 60 very quickly within 12 months. We could be up to 90 within another 6 months. There's more drilling to be done, and very quickly we'll be up to that 200 million mark. And that's by virtue of the fact that we've got a good pipeline of high prospectivity targets already reserved in terms of reservations, tenements, exploration permits, etc. We've put barriers up to entry for others that often come in behind successful exploration companies and start bagging ground around their projects. We've very quickly done the desktop study of the area and put those reservations out to protect us at first mover advantage. It's very low risk in our minds. The major attraction to us for this project when we acquired it was the fact that there is an existing operation, the Terrafame operation, just up the road, who are already mining this type of ore, the black schists, and they do it very well. This is a JV between Trafigura and the Finnish government. They've technically de-risked this for us significantly. This is a low-cost operation, low cost in terms of easy mining, shallow, but in terms of the processing as well, extremely low cost. They use bioheat bleaching, and which you enjoy very high recovery. So they're enjoying, I think, 97% recoveries on nickel. So that's 97% of the nickel in their ore is actually finding its way to the customer, and they're getting paid for that. Low cost, and really to demonstrate how low cost they are in the light of Indonesian nickel flooding the market. These guys, even when nickel is quite a low price at the moment, they're still generating 30-35% EBIT quarter on quarter. So they are truly first quartile world-class producers, and they're our model. That's what we're modeling our business against and our operations against. And their parameters what will feed into our preliminary economic assessment. So hugely de-risked for us. Plus, then you overlay that with the fact that this is a historical mining area. So firstly, you've got the skills and the service providers in the area already. That's often quite a challenge, particularly as in Eastern Europe or in Africa, just to find the workforce and service providers. We have those on tap here. Plus, we have then communities that are extremely welcoming. They want to stop the flood of people leaving these areas and depopulating these areas. They want to bring employment opportunities back to these areas. So they're very pro mining, pro paper mills, pro logging, etc. And like I said before, if you have that license to operate, you're halfway there. So we undertook the mineral resource estimate a couple of months ago. The outcome was published 2 weeks ago. We commissioned Mining Plus, a global mining services provider, to do the work. This was for the P5 asset up in Paltimo. And what you're looking at here is the block model of the ore body as it sits just under the ground. So it actually sits at surface, more or less. There's about 5 meters of glacial till or gravel that overlay this. But then it's easy soft mining, it's open pit mining. So what you're looking at there is the ore body stretching down to about the ore body itself, well, beyond 300 meters. You probably can't see that due to the perspective. But then you have overlaid the preliminary pit design. So what is the open pit going to look like? And as you can see, it's going down to actually about 200 meters, and then we're stopping. So the ore body itself actually continues to depth. We also believe it continues to the north and to the south as well. So while we're sitting with 29 million tons, we will continue to increase the size of this asset over the next year to 2 years, plus also develop all the other targets that I mentioned earlier. So we set ourselves quite an ambitious timeline to get through the various stage gates to ultimately to production and generating that free cash flow I mentioned earlier. So the target for us is 2030 to be in production. That aligns us with the EU benchmark for the 10% onshoring of the supply of strategic minerals for the European market. So you do if you do a countdown schedule back from 2030 to where we are today, you soon realise you've really got to get a shift on to meet that. And it is ambitious, but we believe it is achievable if we execute perfectly. And frankly, today, my team has executed perfectly. We've delivered on time in terms of drilling, on budget. Same with the mineral resource estimates and all the various assays, desktop studies, geophys that have come to this point as well. We don't doubt that the team. I don't doubt the team will be able to continue to deliver that. There are various critical path items that can hold up this process, and they tend not to be technical in nature. They tend to be more environmental baselining studies, the permitting process itself. In the States, we hear about permitting processes taking 15 to 20 years for, Rio Tinto's Resolution Copper and in Nevada and large, well-known projects like that. Here, traditionally, Finland and Scandinavia in general, you don't have those long durations for permitting. However, we do benefit from the new EU legislation. The Critical Raw Materials Act, which came into force this year, actually puts a cap on, for each member country, the cap on how long that permitting can last, and the cap for Europe is 28 months. So that permitting process must be completed within 28 months. The other critical path item then is also the environmental baselining and the social engagement. All those critical path items we're front loading into the work program as much as we can to de-risk any slippage further down the line. So you'll see this year we'll be kicking off the environmental and social studies quite shortly. We've got the PEA going now. What the PEA does for us, other than give us the project economics that we can start to show potential institutional investors, it allows us to apply for strategic project status in the eyes of the EU. It's a capital S, capital P, strategic project status. And that offers us a couple of things. It offers us that permit fast tracking that I just spoke to. It also opens up the options for EU grants and other non-dilutive funding options, which is quite unusual at what is still a relatively early stage in a mine's life cycle. But Europe are forward-thinking in this respect. They do see the issues, the social and environmental issues that are starting to boil over in Indonesia with the nickel supply there, the Chinese-funded nickel supply there. We see it in New Caledonia with the strikes that have shut down effectively 6% of nickel supply globally over the last few months due to the displacement of communities, environmental destruction, etc. So all these are fair wins for us.
Sorry, Jonathan, you're overrunning now. So if you'd like to
I apologize.
Within a minute, that would be great.
Okay, so quickly running through PEA this year, we want to move into the pre-feasibility next year quite quickly on the back of that. And that will also involve having the strategic project status to grease the way through this process and ultimately get into production by 2029. If we do, I just want to stop on this one, Sarah, on this slide really, just in terms of doing a peer comparison of where we are. There aren't many direct comparisons on this side of the water, but if we look across the water to the TSX, there are a number of nickel, copper, either early exploration or development plays that have significantly higher markups than ourselves, with similar size deposits in terms of nickel equivalent tons in the ground. So we're sitting at around about 180,000 tons of nickel in the ground. And as you can see for yourself, we're orders of magnitude undervalued compared to our peers. So our job, apart from the day-to-day operations and executing perfectly, is to really push the message and broaden the distribution of our message and our value proposition as wide as we can, and bring more liquidity into our stock. So I'll leave it there then, Sarah. I think that's time for Q&A.
It is, and I'm just looking at that slide that you've got up. Therefore, are you on the wrong exchange, or is it an ambition to perhaps dual list on the TSX once the preliminary economics assessment has been released?
Yeah, that's a very good question. Certainly we won't be doing anything before that PEA is released. And like I said, the idea is that unlocks that strategic project status and the non-dilutive funding that comes with that. So it becomes maybe less of an issue. It'll be interesting to see how the London markets react to the interest rates hopefully dropping as they're forecast later in the year, and see if that picks up. If Labour would be kind enough to insist that pension funds actually invest in their own stock markets, that could trickle on down to the AIM market as well, which would be very welcome. So all options open, but the focus now is to deliver and to get the message out and to get the liquidity in the market we're already in.
Okay, so you've allowed me to ask a politically charged question. You talked about EU grants there. So Brexit, it hasn't put the roadblock on any potential EU grants for a UK listed business?
No, these are European projects. They're in Europe, and they fall under. We have European entities under which these sit. So no, there's no blockage there.
Excellent. Now, there was a question sent in ahead of this webinar. It was from Jasmine, and she asks, what was the purpose of the capital reorganisation, and what do you envisage the benefits to be to existing shareholders, or are there any negative outcomes following the capital reorganisation? So perhaps it would be good, Jonathan, if you were to summarise what that reorganisation was about and what the outcomes have been.
Yeah, I sort of considered it as a non-event in terms of news flow after the fact, but I realised that it is of interest to people. So as Jasmine probably knows, we had a placing recently at 1p, which was our then par value. Now the challenge with that is that we go through an audit. We were going through an audit at the same time. The recommendation was that we need to take a precautionary measure and drop that par value down to ensure that we continue to comply with the capital market requirements. So that's all around sort of liquidity and solvency going forward. So that's really the only reason. We don't really see any other benefits or opportunities in that. Hence why I would probably thought it was a non-event, but yeah, important to raise it.
There you go. Our shareholders and potential shareholders certainly doing their research. Two questions have come in from Deba, who says, what significant sources of capital have you pinned down to further the project?
It's something that we will address once the PEA is completed. As I mentioned, we will be looking to move very quickly into the pre-feasibility phase. Plus, we want to continue the resource drilling and to continue to build that asset base. Number one for us is to secure significant non-dilutive funding in the form of EU grants, EU project financing, and then look to ideally secure a large cornerstone institutional investor and fund that way. We are conscious that those raises can be dilutive. It is the nature of the business that we're in. We're not producing revenue, so we are spending. And the task for us as the management team is to ensure that the perceived value of Metals One in the market tracks up with what we believe is our inherent value. So what I mean by that is when we get to the completion of the PEA, we'll have an NPV, we'll have an IR and CapEx and so on. And you could arguably attribute a percentage of that NPV to the enterprise value, to our inherent value, whatever that might be. And really we need to ensure that market cap, that share price tracks up to converge with that later in the year, so that when we do come to the market and need to do a placing, we're protecting long-term holders. We're not pulling anyone underwater. And I think it's important to point out that we're all significant shareholders in the company as well. And collectively, as a board, we're sitting at around about 10%. We then have another around about 9% sitting in the Employee Benefit Trust. And then the two project vendors, Pendra Group, so Blue Jay and SRH, are both sitting with about 20% each and locked up for a significant amount of time as well.
The Darby's second question has tickled me. It's it's bringing out the mischief maker in me. He says, bearing in mind the advantages you have covered, why was this project overlooked for the past 20 years? Now, don't get paranoid. You only look late 20s. I'm quite sure he's not saying, where were you 20 years ago? But yeah, why was it overlooked by people who have crossed that terra firma before you?
Yeah, I often ask myself that and the vendors. I think, we had an advantage. We saw opportunities in these assets that maybe previous owners hadn't seen, and that's an easy answer. But to give you that into perspective, if you look at the P5 resource estimate that we recently released, we managed to achieve that without any drilling. We recognise that asset, the core samples, the assays that were undertaken originally 15 years ago on that asset hadn't been done correctly. They were done using sort of handheld XRF devices like Star Trek tricorders, something not particularly accurate and wouldn't hold up a mineral resource estimate. So we basically went back and got those cores chemically assayed, the gold standard for assays, and there you go, 29 million tons. So it's those kind of opportunities that we saw that people hadn't seen before. And the other challenge, I think, for others looking for these kind of opportunities from a distance, is that you have Terra Firma who are active already, that have got a very successful business mining and processing this material. They're not a publicly listed company. It's very hard to get the information and the parameters and understanding of what their all-in sustaining cash cost is, their labour cost per tonne. It's quite opaque. We have an advantage in that we have a good grasp of that between us, being mining engineers, geologists, etc., nickel experts. So again, it's going in there with its eyes wide open, where others are probably got one eye shut.
Okay, so finally, because it's me that's overrunning now, so the Black Schist project's 100% owned. You've got significant skin in the game. Right at the beginning, you were talking about, that the pathway to free cash flow is a possibility. When would you like to see positive free cash flow?
I'd like to see it in 2030. I'd be quite happy to see a very nice offer coming along from a major mining company in the meantime that sweeps us off our feet. That would be very welcome as well. Whatever releases the value soonest and is a fair reflection of the value that we've generated, I think we'll look at all opportunities. But just to correct you on the 100%, so currently we're sitting at around about 93%. So Gunsin, the previous farming partner who we bought out, continues to hold about 6%, and we have an option to acquire that back off them within the next 2 years, which we will do at the right time for us.
Forgive me for that error. It was a minor one, but good that Gunsin's on board. Jonathan Owen, Chief Executive of Metals One, it's been an absolute pleasure. Thank you for being our final act and what has been a really good webinar. Thank you very much.
Thank you, Sarah.
You're welcome. So a huge thank you to all our doe-eyed and delightful presenters, London Broadcast, the production team behind this webinar platform. Thank you from your hosts, London South East and focusIR. We look forward to seeing you at our next webinar. Details to be announced. Take care. Thank you and cheerio.